What's up, YouTube? This is Gary, and we're back at it again for another episode of the Mortgage Motivation Podcast. And I'm not in the house. I'm not outside today. I'm driving in the car. And I was like, I just got the phone and I took 2 phone calls about down payment assistance programs. And I never really, got too deep into how the programs work. Kind of like just talking about the different programs themselves, not so much of just the general information about it and the breakdown overall how most of the programs work with down payment assistance. So it doesn't really matter if it's nationwide, local. They all kind of work the same, and I want to go over that today. So a down payment assistance program, I always like to start off just saying down payment assistance is assistance. So it's not technically meant to pay for all of your costs. When you're using a down payment assistance program, it could be used for your down payment and your closing costs. A down payment is, so if you put down 3.5%, you could use money for that if you need additional funds for your closing costs. So down payment assistance could really work out well for certain people, okay? And especially if you're able to still get seller help from the person that's selling their home, if they're giving you money to help it with your closing costs. If you're using other programs where they're giving you money on top of the down payment assistance, it could be a really good thing. And you do find sometimes people find themselves in a situation where they're not bringing any money to settlement, none whatsoever, but it doesn't happen every single time. And here on my channel, I like to get rid of all the misconceptions and a lot of noise that you hear sometimes on YouTube or on social media, especially from people that's not even in the industry. I'm like, how are you giving advice? You're not even in the industry. So a lot of times you'll find yourself getting educated by someone that hasn't been licensed in what we do. And as a mortgage broker, I am licensed, been licensed well over a decade. So we got to keep up to what's going on in the industry to make sure that the information that we're giving our clients is accurate. So with all that being said, you could use that with seller assistance. And that's when the seller is giving you money to help out with your closing costs. If you're giving gift funds, so if your parents or a friend or a family member is giving you money to help you out with your closing costs, you could use that with your down payment assistance program as well. Like I said, you can combine all those together. But back to the down payment assistance program itself. It's broken up into, I would say, 3 different categories, my opinion, right? One would be a down payment assistance loan. Probably see that more than anything else out there. It's not sold as a loan. You don't hear it advertised as a loan, but it's truly a loan that's been placed on your property. So if you're buying a property and they're giving you $10,000, not giving you, they're giving you a loan for $10,000. They'll attach that $10,000 loan to your property until whatever stipulations they have on that property are met. So that's a loan. A loan could be paid back by you doing a refinance. A loan could be paid back by you selling that property that you have. And also there are programs out there where you have to pay the loan back in monthly payments. So you have to find out which one you're signing up for. So that is very important that you do that. Ask a lot of questions when you're doing a down payment assistance program, because you may think it's just, free money, and it's not at all. And that's what I see all the time. So make sure you do your research to ensure that whatever you sign it up for is truly what you're getting. So like I said, a loan could be paid back monthly, it could be paid back by refinance, or it could be paid back when it's time for you to sell the property that you're purchasing. The second one is my favorite, and you see I'm smiling. It's the grant. The grant, obviously, you don't have to pay the money back. So there's programs out there will allow you to take out a grant on that property. So say they gave you $10,000, $15,000, $20,000. The money does not have to be paid back. Now there are situations where you have to stay in the house for a certain amount of time. The same thing with the loan. So if you stay in the house for a year, you stay in it for 2 years, 3 years, 4 years, 5 years, 10 years, that the money does not have to be paid back. And there's some where you can refinance within a month or two, and there's no repercussions on that. If you was to sell your property or refinance your property, you don't have to pay that money back. So be on the lookout for those. You don't see a lot of them, but we do at Affluent Mortgage, we do have access to quite a few of those grants that are given out nationwide, because we have different lenders that have their own grant program or a loan program. So depending on which one works out for you the best, that's the route we're going to go. So that's your grant. And the third category would be is, I would say the loan itself that that's forgivable. So you have your forgivable loan. That could be 3 years, that could be 5 years. If you pay on time and you're never late, then they will forgive your loan, meaning that you don't have to pay that back. So I like those as well. And myself, I allow the scenario of my client to kind of dictate which route we have to go. Most programs, you do not have to take a first-time homebuyer class. Those requirements changed. I think like during a pandemic, they kind of loosened up those standards. You don't necessarily have to take a class, but you do find sometimes where your credit scores are lower than they say anything that's less than 640 or 630 credit score, you got to take a class. You do have to take it sometimes too when you're going through that program. Or it can be a local program where they want you to take a class no matter what. It could be an 8-hour course, 6-hour course. So depending on the program itself, they will let you know what type of requirements are, that you need to meet in order to qualify for the program that they're hosting. So a couple of things that a lot of these programs will like for you to have in order to qualify, because there are qualifications. Just because you want to buy a house doesn't mean that you'll qualify for a down payment assistance program. But like I just clearly said, that depending on which program you sign up for, the guidelines can be different. So they will let you know exactly what guidelines you need to meet in order to qualify. And a lot of those guidelines are broken up into credit scores. So you gotta have at least a 620 credit score, a 640 credit score, a 660 credit score in order to qualify. So gotta find out what your minimum credit scores are. The second thing will be is a lot of times is income. So your income gotta be either low enough or high enough. Sometimes these programs have a minimum income requirement and some of them have a maximum. A lot of times they have a maximum because they want to give these programs out to people that really need the help. And that's broken down to how many people you have living in your household too. Some do, some don't. So you got to look out for that as well. So income based, so credit scores and income based. And some of them even have debt ratio requirements. So if you're going through the program, your debt ratios can be more than 43%, 44%. And a lot of them say, you know what, as long as the lender approves your loan, then that's okay with us. So as you see, there's some moving parts to these programs. The biggest thing is just exposing what is out there and what it takes to qualify for a lot of these programs. So that's like the main areas that is there. So one thing that I do want to point out, and I say a lot of times this part is being ignored, is the fact that some of these programs, in order for you to get the loan, you have to agree that you're going to stay in a house for a certain amount of time. And that part a lot of times is missed. So you may have one program that says that you have to live in a house for 2 years, 3 years, 10 years. I've seen it all the way up to 15 years in order for you to not have to pay that money back. And honestly, there are programs out there also. Doesn't matter how long you live in the house, you can stay in the house forever. But if you have a loan for 30 years, you have to pay that money back. So that's how that works out. So you really want to be educated on these programs. And even though the loan officer is going to try to help you out, or with me, I'm extremely transparent. So at Affluent Mortgage, I'm going to tell you everything about the program, and we're going to decide together if there's something that fits what you're doing. And the best way to kind of break that down, guys, is if you know you're going to be in the house for only 2 years, 3 years, then you really want to be mindful what type of program you sign up for. But if you know that, hey, this is more than likely going to be my forever home, which is kind of tough to say these days, but if you know for a fact that you're going to be there for 5 years or 10 years, or you know that you have the funds to pay that money back, then it's okay. You could go ahead and sign up for that program and feel okay with it, because sometimes people really need the money for that program. So like I said, it's definitely beneficial. I use the program all the time, but sometimes we're able to make it work without going through a down payment assistance program, so you're not on the hook. So one thing, like I said, that the main thing I want to point out is a lot of times you have to stay in the house for a certain amount of time. The other thing is you want to think about a true scenario. So if the rates were to drop, right? Say the rates were to drop in the next year, you got to be okay with either paying that money back so you can refinance, or not being able to refinance at all. Because what happens there, say you took out a loan for a $10,000 down payment assistance program, and your loan amount was at $300,000. Now it goes from $300,000 to $310,000 because of that second mortgage that you have on that property. If the rates were to drop and you want to refinance, you got to keep in mind, you got to have equity in the property in order to do a refinance. And a lot of times you're maxed out, at 75% for the value of the property, or 80% of the value of the property, meaning that you got to have 25% of equity in that property in order to qualify, or you just take out cash yourself that you have. I'm not sure where it comes from because you use a down payment assistance program, but you would have to pay that money back at that time. So, or if you have to move, say you get a new job offer and you have to move, or it could be for personal reasons why you got to move out of the house and you need to sell your property, just keep in mind those loans have to be paid back. Like I said, not necessarily a bad thing. I just want to make sure that we stay extremely transparent with a lot of these programs. So when you're looking to use these programs, it makes sense for you. I would definitely compare and see if there's a way that you can purchase a property without using a down payment assistance program. And if you speak to me, we're going to try to figure that out for sure. But if you definitely need the money and there's no other way of you being able to purchase the house, then using a down payment assistance program probably is the way to go. Just make sure you understand the pros and the cons with anything that you sign yourself up for. I always promote being in the driver's seat, no matter what you're doing. It doesn't matter if you're buying a house or if you're looking to take out any type of investment. Make sure you're in the driver's seat and understand the pros and cons and everything that you sign up for. So that's all I want to go with today, just to make sure I hit on those. Now we can get a little bit more granular with the down payment assistance program, but I want to kind of hit the main items that I see and that I discuss with my clients anytime someone's looking to use a program to purchase their first house. There's a lot of opportunity out here, even with the rates still being in the sixes and sometimes in the fives. But there's some great programs out there. We just got to identify which one will work for you, and from there we'll know which route we need to go. All right, so good luck out there. Keep looking for the home that you want to purchase. Stay motivated. Don't give up. I don't care what anybody says out there. If you want to purchase a house, you will find a way to do it. But just make sure that it's right for you. And make sure you subscribe to the channel and share. If you know someone that's looking to purchase a home and thinking about using a down payment assistance program, send this to them, so you can take a look at it, just to make sure this is something that truly fits their situation and scenario for their family. And let's keep this thing going. 2026 will be here before you know it. And I'm motivated. I'm motivated for you guys. That's why I named the channel Mortgage Motivation, because there's you got to motivate yourself in order to do what we do sometimes. And I'm right here with you. So if you have any questions, let me know. If you want to send a comment, if you want to put down a comment down here at the bottom, I'll be love to answer any questions that you may have about the down payment assistance program. So look forward to speaking to you guys next week. Peace.